All right, my friends, welcome to part four of our series. We're going to finish up with the A's here today on taxes in retirement for state taxes you pay as a retiree. And we're going to go with the state of Arkansas, the beautiful state of Arkansas today. So we've gone from Alabama to the high Northwest and Alaska, way down the Valley of the Sun in Arizona. We're going to finish up the A's today with Arkansas, beautiful state of Arkansas. So let's go into this. It'll be interesting. And again, I don't know how Arkansas holds up, and we're going to rely on our three sites: Kiplinger's, Smart Asset, which is relatively new to me. I'm not familiar with Smart Asset until I started doing this stuff. So they're coming at it strong in terms of all the stuff they're offering here. I'm a fan of Smart Asset. I think what they're trying to do is use their website to find financial advisors that the financial advisors probably pay Smart Asset to send you to. So if you're a client, you're like, I need a financial advisor, and I guess that's probably New York City. You're going to find out Smart Asset, because I know they're on CNN and a couple other websites. And you're going to say, this looks like a great thing. You're going to see this little pop up, put all your name and information there, and then they're going to send you to a financial advisor who's on their list. That's generally how this stuff works. They put a lot of content out there, and they develop a lead base for financial advisors that they sell the leads to. Nothing wrong with that in the least, actually. In fact, if anything, I like that better than some of the other techniques that are out there to identify potential clients for these guys. And one day I might join Smart Asset. I don't know. We'll see. But I like it. So that's pretty good. And because they are giving a lot of great info, I'm telling you, just a lot of good stuff here. So I'm a fan. All right. Then we got, of course, foundation. So just tax foundation, it takes the cake. Kiplinger's is second and not that far behind. So all right, let's see what Kiplinger says here about the most favorable and least favorable states and taxes. So here's our a southern state that's not tax friendly. Wow, look at that. A big fat not tax friendly in the natural state. It does exempt Social Security and up to $6,000 retirement income from state income tax. But note that income that exceeds these breaks runs into pretty steep taxes. Although Arkansas's real estate taxes are among the lowest in the nation, its sales tax, which is levied on food as well, are near the top. A plus for veterans. Starting 1 January 2018, all military pension will be exempt. I need to write that down. That is fantastic. All military pension exempt in Arkansas. That's good. I did not know that, and now I'd like to know that. That's fantastic. As I deal with in my previous live, a lot of retirees, military. State sales tax, 6.5% state levy. Localities can add as much as 5 1/8, and the average combined is 9.3. Woo. The state taxes food at 1.5%, and localities can even add to that. So they hit you hard on a sales tax. Income tax range up to $4,200 of taxable income. I mean, basically you go, I don't know, plow some snow in someone's driveway or mow a couple of yards, you can have that. 6.9% on more than $35,000 of taxable income, and if your total income exceeds $75,000, we're gonna have to dive into that. I know what the difference between gross and total is. Is that gross and taxable is, or is that what they're determining here? 6.9% if your total income exceeds $75,000. So if you have $50,000 of Social Security and $26,000 of IRA distributions, is that considered your total income? Let's find out. Effective tax rate there is 4.2% on the individual and 6.2% joint. Social Security benefits are not taxed. Of course, railroad benefits are exempt. The railroad union has some good lobbying, that's for sure. Up to $6,000 in civil service, state, local government pension, private pensions. So kudos to Arkansas for throwing private pensions in with the other pensions as well. It's discriminatory against private entities without question. The exemption refers to income from public and or private retirement systems, plans, and programs. Hey, IRA distributions qualify if the taxpayer is 59 and a half or older. So if you have hey man, kudos Arkansas. I mean, not only are they saying $6,000 of a pension, private or public, is exempt, But IRA distributions are also part of that $6,000 exemption. I wonder if if you have $6,000 of pension and $6,000 IRA distribution, if that qualifies for $12,000 of deductions. That'd be interesting to see. I don't know the answer to that. But if you had $6,000 pension, $6,000 IRA distribution, and Social Security tax, and Social Security, which is exempt, you're probably free from state taxes in Arkansas, I think. I don't know. Out-of-state government pensions also qualify, and then, of course, military pensions are fully exempt. So that's pretty cool. We talk about this, 401ks, defined contribution plans, all the defined benefit and defined contributions and qualified plans and IRAs qualify for the exemptions up to $6,000. Property taxes, median property. Whoa, look at that! Arkansas's median home value is $114,000, and the median taxes are $693. So that's low. That's fantastic. Tax assessed on homes for residents 65 and older is capped for the previous years unless improvements are made. So basically, not much property tax there. Vehicle taxes, the state sales tax on vehicles over $4,000 is 6.5%. 7% for Texarkana residents, I guess, because you're sitting there right next to the state of Texas, since Texas has different tax thresholds. Sales below that threshold are tax-free. So if you're buying a vehicle that's less than $4,000, you pay no tax on it. If you're buying a vehicle more than $4,000, you're paying a 6.5% tax on that. That's not cheap. A local property tax is also levied annually on a car's assessed value. Rates are set at the county level. For example, in Little Rock, you pay $64 per thousand. So a tax on a $30,000 vehicle would be $1,900. Wow. That's pretty significant there. And that's annual? That can't be. So this must be the sales tax that they're talking about, but they're also talking about a local property taxes set annually on the car's assessed value. So you're going to pay this pretty significant sales tax, $2,000 on a vehicle of $30,000 assessed vehicle. But then you're going to pay, and it's hard to follow, you're going to pay on top of that an annual property tax as well. No inheritance or estate tax in Arkansas. All right, so now let's go to Kiplinger. Let's see, for tax foundation, excuse me. So let's see what they say about the natural state, the great state of Arkansas. This is individual taxes now. So top individual tax rate is 6.9%. When you factor in taxes and local tax, state and local tax burden, Arkansas is in the top 20. And again, unlike college football, we don't want to be in the top 20. They're ranked 17. That's the state and local individual income tax collections per capita is $895. I think you got to consider that relative to the income that you're going to get in Arkansas relative to some of the bigger states here. So this one I pay more mind to because as a percentage of your total tax burden is more important than the actual dollars you pay, because the dollars you pay in California are inherently going to be higher because its cost of living is higher. Well, actually, the Arkansas is April 13th, whereas Arizona was April 15th, if you remember that, for Tax Freedom Day. And so that's ranked 12. I just want to see what comparative tax map. That's interesting. So if Arkansas is ranked, in this case, we do want to be in the top 20. See, this is where the Tax Foundation makes it confusing. All right, so Arkansas is ranked 12, which is good. We want to be in the top 20 there, but we don't want to be in the top 20 here. So that's it's confusing. So the Tax Freedom Day is ranked 12th, which means it's the 12th most favorable from an overall tax burden of all the 50 states. However, it's the 17th least favorable when it comes to state and local tax burden. It's confusing, but let's talk sales taxes, always a big one. Oh, look at that. High sales tax. They're ranked 3. And again, this is the one we don't want to be in the top 20. And the state sales tax combined with the local and average, you're looking at almost 10% in taxes. Wow. So you can take this average local and this state and combine, you get that right there. That's pretty significant. So they're ranking number 3, which is not a good rank. Let's see here. 21 cents per tax on the gasoline, which is ranked 40, so low. And again, $1.15 on cigarette taxes per pack. Let's look at property taxes. The property tax, I'm telling you, I would rather have a low property tax. All right, if I have my choice, I'd much rather have a lower property tax than a lower income tax, without question. Now, if you're not owning the property, that's one thing, but certainly if you're renting a place, they're going to get you. I mean, they're not eating that cost; they're passing it over to you in rent. But I'd much rather have a low property tax. So that's quite low, actually. Taxes paid as a percentage of owner-occupied housing is less than 1% and closer to 2/3 of 1%. That's fantastic. So overall, other than the sales tax, which is pretty astronomical, income taxes, I don't know, it didn't seem that burdensome to me. It does. Sorry, look at that. I mean, I take that back. 10.1%. I thought that sales tax. Yeah, so you got big taxes on the income tax. You got huge taxes on sales tax, and way low taxes on the property tax. So if the 2 out of 3 ain't bad, well, it's the exact opposite here. Only 1 out of 3 isn't bad, and that's not favorable. That leaves a lot to be desired. All right, so let's look at the their calculator for what they're saying about Arkansas. So far, not nearly as favorable as the other states we've looked at: Arizona, Alabama, and Alaska too. So remember, we did 25,000 of retirement income and 25,000 Social Security, and we said, what is the tax going to be? And let's see what they say here. Crack how? $138. Okay, I'm just curious because remember they said over 75,000 bucks, they're going to tax you more. If it's you're going to be the higher tax bracket if you're going to be in a if your taxes, your gross income essentially seemed what they were saying, implying the Kiplinger saying. So if you have 51,000 retirement income and 25,000 Social Security, your taxes are $1,300 in Arkansas state taxes. What if we just bear with me just 1 second? I want to try something. What if we did the other way here? And we're going to go crack out there, and we're going to do 51,000 in Social Security. That's going to put us over the 75,000 threshold. Yeah. See. Okay. So again, all right. So it's confusing, but they're not using Arkansas. They're saying if your income, your net income is over, not net, if your income, annual income, they didn't specify that in the Kiplingers, but if your annual income is over 75,000, you'll be in the highest bracket. But your annual income, they're going to exclude Social Security from it, which is good, according to this smart asset tax chart, which is good, because I was worried about that. What if you have large Social Security income and not that much distributions from IRAs? Are they going to still say your annual income is over 75,000, which means they're going to tax you at 6%? And the answer is no, they don't. At least according to this thing, that's this calculator. So I'm a fan of that. That's fantastic. So basically, as long as your income is predominantly in Social Security, $6,000 IRA distribution, $6,000 pension distribution. Actually, let me try that too. Let's do this. Let's add a pension. Because remember, they said $6,000 were exempt from IRAs and $6,000 were exempt from pensions, and Social Security was forgiven as well. And that did raise your tax up a little bit, not much. Why? Because I'm only doing $6,000 there and $6,000 there. Why would that be? Let's do this. Let's try this. Because remember, we have $6,000 exempt from pensions, $6,000 exempt from Social Security, from IRAs, and $6,000, and then the entirety of Social Security should be exempt. So here I'm going to try something. We got $6,000 IRA distribution, $6,000 from private pension, and everything is from Social Security. You add all these three things up, it still puts us below the $75,000 threshold. So there should be no income tax unless, yeah, what happened? Oh, here we go. Oops. Yeah, right. Okay, sweet. There we go. Look at that, my friends. $6,000 from pension, $6,000 from IRA, $51,000 from Social Security. That's $63,000 of gross income. Nothing, because Social Security is exempt from tax. $6,000 in IRA distributions are exempt from tax. $6,000 from private pensions are exempt from tax. So just here, hang in with me just for a second. Not saying this would be easy to do, but let's just say you have $65,000 of Social Security income. That'd be 70. Yeah, okay, that'll put us over the $75,000 threshold. Let's see. Nothing. Yep, look at that. Sweet. So if you have predominantly Social Security, pension, and IRA distributions, the bulk, unless your IRA distributions is significant, or if your pensions are too, because the military pension now is all exempt. Another reason why you need to be, making the most out of your Social Security. A fact. So that's fantastic. That means even if you go above the $75,000 threshold, you don't pay any income tax in the state of Arkansas. So now, what that means, going back to, let me get rid of this guy. Going back to this thing. Individual taxes, well, nothing. We just saw that. Individual taxes, depending on where your income comes from, is nothing, which is a big win. So even though Arkansas, by and large, is not tax friendly, well, it depends on you specifically. Property taxes, nothing, essentially. And yeah, you do have some high sales taxes, but I would take that. Now we're talking 2 or 3. That ain't bad. Whatever that song was, I don't even know who sang it. 2 out of 3 ain't bad. Fleetwood Mac or something like that. I like it. So that's good. It's good to know. So Arkansas, this is why you got to look at the dive in deeper than just it's not tax friendly, then I'm not moving there. What exactly does that mean? Again, if you have a large IRA distributions, large pensions, it's not going to be tax friendly. But if you can have the bulk of your money come from Social Security and $6,000 of IRA distributions, and then you're, say $6,000 from a pension, military, private, or government, that's $12,000 right there tax free, and your Social Security is tax free as well. Now, I didn't understand if it's $6,000 per taxpayer or is it $6,000 per account. See right here, if your total income exceeds $75,000, so that wasn't all right. IRA is just exemption of $6,000. I have to assume that's per taxpayer, but I don't know. All right. So, but as we sit here today, that's not too shabby. Arkansas, you're holding up okay. A lot better than I initially thought when I saw that they were calling you not tax friendly. So hope this helps, guys. Again, don't forget to go to heritagewealthplanning.com. Subscribe to Heritage Wealth Planning, the YouTube channel here. Don't forget to subscribe. Thumbs up always help. Questions or comments? Do you have any experience with any of these states we're talking about? Here is Arkansas particularly. Love to hear them. Love to hear what your experiences are with a tax man in the state that you live in. We'll see you next time on the Heritage Wealth Planning YouTube channel. Thanks, guys.